if you had to start all over with crypto again, which 3 coins would you put in your portfolio?
Well, I think Bitcoin, Ether, and Cardano, ADA are kind of the top 3 for me, because each one represents the best in class for its generation. And I like being a generational investor where, you know, something introduces a generation, it has a great culture, it has a great ecosystem around it, there's a stickiness about it, and the people who belong to these are very fanatical about these things. You know, the Ethereum people love Ethereum, and the Bitcoin people love Bitcoin. And if you meet anybody in the Cardano ecosystem, they really love ADA. And, you know, markets go up and down, but I tend to enjoy those generations. And obviously, Midnight's coming, so that's the 4th generation, so we'll include that as well.
And the other question would be, how would you navigate through a bear market personally?
Having done it 4 times. You know, I've been in crypto. Bitcoin was under $1. I watched it go up to $30, down to $4, up to 256, down to 80, up to 1,200, down to 250, up to 20,000, down to 4,000, up to 68,000, down to 25, up to 100, and now we're back down. You know, the universal truth of crypto is there will be volatility, and really, the things that survive are the things that are chasing solving real problems, and they have dedicated, disciplined people behind them, and there's a reason to belong to that ecosystem besides just the price appreciation. The things that don't survive are people trying to chase the next thing. You know, they say, oh, well, you know, how do I launch a bigger meme coin, or how do I be better, faster, and cheaper, or do the same thing again and again? You have to bring something new to the table, and in a bear market, it's the all-you-can-eat buffet of new ideas. And we get to kind of get a sneak peek of what the next paradigm is going to look like. So after the 2017, 2018 collapse, we had several years to kind of beta test what the 3rd generation was going to look like. And Cardano did very well in 2021, as did Solana and a few others. And now we're entering the 4th generation. So we have a little bit of time for the market to decide where that's going to go. And I would argue it's going to be programmable privacy, computational privacy, selective disclosure, and chain abstraction are kind of the 3 big things above and beyond what we got from the prior generation, which was scalability, interoperability, and governance. So it's going to be a lot of fun to kind of see how those winners and losers come in. But I'm old enough to remember in the smart contract era, we had NXT and BitShares and EOS and in Ethereum. And a lot of people forget all those things, but at the time they were totally legitimate. In fact, when I was the CEO of Ethereum before the earth cooled for that brief period of time, the thing that I was really concerned about was NXT, because they were growing much faster than us, and they had automated transactions, which were effectively smart contracts. They had an on-chain DEX. They had a token issuance platform built right into the wallet, and they were written in Java, and they had a great dev community. They were just really vigilant. The thing is, their tokenomics were just not structured in the right way, and it kind of worked against them. So everybody kind of failed for various reasons. And the other thing in a bear market is it's a time for deep reflection. You have to take the time to look at, well, why did the projects that failed fail? Why did EOS fail? You know, why did BitShares fail? You know, why did NXT fail? Or look at the next generation, you know, why did Harmony One fail and Solana succeeded? They were both kind of coming in at the same time. Now you have Sui and Aptos, and they're kind of going at each other as the next thing for better, faster, cheaper. And then Polkadot's trying to reimagine itself with Jam, and obviously we have Ouroboros Leos with Cardano. So the other universal truth is everybody can reinvent themselves if they have enough time. Bitcoin seemed old and stale, and then Taproot comes in, and now Bitcoin DeFi is probably going to be the biggest area of growth besides real-world assets. And even XRP is reinventing itself. They just bought a large prime broker for $1.25 billion, and they've survived their legal challenges, and they probably can find a way to be a very competitive bridge into the legacy financial world. And if they partner with the right smart contract layer, they're back in the game. And everybody thought that they were out of the game. So you see, you can be on top or you can be on bottom. Crypto has that effect with people.
Perfect.
I could just intervene because I thought it was very interesting what you said about a crypto project failing. EOS is a good example where many people view it as failed because it maybe hasn't reached the adoption that it wanted to, or its goals that it maybe set out when it started. What's your definition of a failed crypto project?
The founders abandoned the project without completing the roadmap. The project clearly has no direction or clear product roadmap or product market fit, and there's no intrinsic reason to adopt or build in that ecosystem. Ethereum Classic is another example of that, you know, where it diverged, and the Ethereum Classic had to decide, does it want to be a real thing? And then it decided it just wants to forever be a protest coin, but there's no compelling reason for anybody to want to deploy anything on Ethereum Classic. And similarly with EOS, when you look at how it's structured, there's really no compelling reason for anybody to want to build on that, especially when you have alternatives like Sui and Aptos and Solana, which kind of are better versions of what EOS imagined it would be. And the founding entity just took the money and ran. Block One basically said, hey, we have no fiduciary obligation anymore, and thanks for the $4 billion, and goodbye, everybody. So you have to be very clear about your goals and commitments. You have to honor those goals and commitments. Cardano, it's been over 10 years now, and we said Byron and Shelley, and we said Gauguin and Basho and Voltaire. And it's been very hard, but we've been working our way through as an ecosystem through each and every one of them, and it's very clear that those have been delivered, and the last era is Basho, and so by next year it should all be done. At that point, you have an ecosystem that's vibrant, it's well diversified, it is self-determining, meaning it can pick its own roadmap. You have a strong enough on-chain governance to be able to decide what to do on a product roadmap basis, on a year-to-year basis, and on a sufficiently large budget to be able to pay for that. And you also have a situation where the founder can stay or go, but it's immaterial to the long-term success of the ecosystem. Satoshi did it right. You know, he got Bitcoin to a point where it was stable and sustainable, and he didn't need to keep being there. In fact, if he kept being there, what would happen is that every time a crisis occurred, he'd have to jump back in, like Mt. Gox, for example, or the failure of Silk Road. And then you'd create this dependency culture of the only way Bitcoin can survive is by having the founder basically come in and save the company, save the protocol. And that's not what Bitcoin's about. It's supposed to be decentralized. And by leaving, while it was painful in the short term, what he was able to do is create the ultimate decentralized anarchistic system. So it's going to be here forever as a decentralized store of value. So there's a timing behind when the founding team has to step away, and there's a structure on how to do that appropriately. If it's just pure code, you do it once the open source project is sufficiently large. But if it's more complicated, meaning that you have a very complicated roadmap and an on-chain treasury, you have to leave a DAO behind. You have to leave some form of structure behind. And you have to get to enough participation that it's integrity preserving and it makes good decisions.
Would that also mean for you and for Cardano, for example, if you say you reach a certain point where you say, okay, Cardano is in good hands, that you would then completely withdraw from the project?
Not necessarily, but you change your relationship with the project. And so you're a value add, but not a necessary evil. And so all the time what happens is founders stay too long and you can't really get rid of them, but they create toxicity or poison the ecosystem. Some people in Linux argue Linus Torvalds is creating this issue, or Bill Gates, for example, with Microsoft, where he stepped down as CEO, but then he was also like a shadow CEO for 10 years, and it kind of contaminated Ballmer's decision making. And Microsoft missed an entire decade of technology. They missed the Google search, and they missed Facebook, and they missed the iPhone, when they had every reason to be competitive in those types of markets. So every founder has to know when to be in the room and how to be in the room, and then when to leave the room, and if you want to re-enter the room, how to do so in a way where you don't cause problems for your ecosystem. So what's happening with I.O. is we're leaving behind a shim of engineers who will always be there, and researchers who will always be there to be part of the open source project. But then IOG, my venture studio, they go from building Cardano to building on Cardano. So we build projects like Midnight or projects like Lace or Hyperledger or Dentis, where these things add new dimensions and competitiveness, but they're not necessary for the protocol to run. They're a value add into the ecosystem. And so we're a market participant. But what's nice about that is when you have that clear separation, then you're in a situation where no one party has enough power that it creates a dependency culture. That's the most unhealthy thing you can do. But you need a sufficiently strong governance structure that it's integrity preserving, it can make good decisions in a timely way that over the long run benefit the ecosystem. And that's what we spent the last 2 years doing with Voltaire, and had to write a constitution. 1,800 people participated. The workshops all around the world, 65 and 50 countries, and then the Constitutional Convention, obviously in Argentina. The Constitution then had to be ratified on chain. There's over 1,000 DREPs. There's an elected constitutional committee. And it's a really intriguing governance structure. It doesn't have an executive function. It has voluntary institutions. And it also has a hybrid of liquid democracy with a constitutional republic. It's never been done before. So we'll run the clock, and we'll see if it can do things. So first, it just ratified the roadmap, so we have some clarity on what the official roadmap of Cardano is. Not what Charles Hoskinson said, but the ecosystem as a whole. And now there's a $1.5 billion treasury in Cardano, and we have to, as an ecosystem, spend it, and spend it wisely. So that's the very next thing they're debating right now, and we're right in the middle of that process, and probably within about 60 to 90 days it'll conclude, in which case we not only have a roadmap, we have a budget, and we have people being paid to work for the blockchain, selected by the blockchain, which is a really intriguing and cool thing. And then you can look at the efficacy of that process. Was that wise spending or wasted spending? Did we get a good outcome from that spending? Like, did Cardano become more competitive? And these are the kinds of tuning that's required. And it'll probably take 3 to 5 years to get that tuned in a way where the system works well. But then once it's there, think about what we have. We have a self-sustaining, self-governing ecosystem that is adaptable. It can take any idea from any place. Anybody can be a leader, and it's running itself. There's no governance keys. There's no founder overseeing the thing. And there's no dependency culture on any particular dev company. There's more than 20 development companies now working on the Cardano code base. In fact, while we were here in Paris, there was also a node diversity summit. So there's multiple nodes being written, multiple implementations being written of Cardano. So we have the Haskell node, which we're famous for, but there's also a Go node being written, and there's a Rust node being written, and a TypeScript node being written by completely independent development teams. And what this does is it creates diversity and resilience inside the ecosystem, and that was a very organic thing. It wasn't like a central planner sat down and said, you know what we need to do? We need to write a Rust node, or we need to write a Go node. People just decided to start doing these things, and they started making the case to the ecosystem that they require funding. And that's really what's been so magical.
Mm. You've touched on many things we were going to ask you during the interview, so I'd say we maybe just step back a bit and
then go more on the, yeah, I mean, that was basically the entry question we wanted to ask, but I remember last time when
we're very efficient, you know.
Yeah, we're very efficient. So, but last time when we met, that was at the Web Summit 2022. And you told us about your farm in Colorado and stuff, and how you have like 500 buffaloes or so. Like,
yeah, that's in Wyoming. So I have a farm in Colorado and a ranch in Wyoming.
The first question is how the buffaloes are doing.
Oh, they're doing very good. We had to cull the herd a little bit because they got too big. I had 800 of them, and they were on the ready to get to 1,200 because I was always traveling, and the guy who was taking care of them got some health problems, and so he wasn't able to do the best job. So we downsized a little bit. So we've got about 300 bison now, and I sold the rest of them to Ted Turner's ranch.
Because of the upcoming bear market, or what?
No, because it's 11,000 acres, but it can only really sustain about 400 to 500 bison at a time. Letting them be free range, meaning they get to be real bison and wander around. Otherwise, they overgraze the land. So when you're sitting around 800, then you start noticing all the grass disappears, and it gets a little crowded. And bison breed quickly if you let them. So 800 turned to 1,200, and then 1,200 turned to like 2,400. It's like this nice model, it's like the rabbits in Australia. So we decided to cut it down there. I got a lot of beef jerky, bison jerky and these things. And obviously there's some happy people in North Dakota and Montana now from that decision. But the herd is doing quite well, and it's fun. It's nice to drive around on an ATV, and you look to your left and you see this herd of bison that's basically wild. They're not vaccinated. They're not fenced in a meaningful way, and they're free range, and so they behave very much like the Yellowstone bison do, or the bison that the pioneers grew up with, or the Indians grew up with. So that's fun. And the other thing too is bison are just damn near indestructible. They really are good at managing themselves, and so if one of them gets sick, they kind of isolate the herd from that sick bison. Cattle are the exact opposite. If a cow gets sick, they all circle it and start licking it, and they get themselves infected, and it's just terrible. In bison, when a snowstorm happens, most animals run away from it. Bison actually walk into the storm. They're that hardy. They're very strong animals. So it's the perfect entrepreneur animal because you don't have to do much. You only have to feed them during the wintertime, but outside of that, they just do their own thing, and they're quite happy. Now, that said, they're not pets, so you can't go and touch them. They'll kill you if you do that. But you can admire them from afar, which is probably the way it should be.
We're going to move now to some more market commentary.
Sure.
Because you said you've been through a couple of bear markets. There's some turbulence at the moment in the crypto markets.
I haven't noticed at all.
Yeah. How do you view it? Do you feel the kind of hype phase is over? Has it maybe surprised you that we've entered this turbulence after everybody was fairly optimistic with Trump coming into office, new regulatory wins?
Right. Well, I mean, it's like we just pretend like the macro economy doesn't exist in crypto. Guys, if there's a trade war going on and we're headed into a recession, or at the very least, there's a lot of uncertainty, why in God's name should crypto somehow still go to the moon? You know, we're not a safe harbor asset quite yet. We're working our way in that direction. I'd argue in the long term, 5 to 10 years, we will be a safe harbor asset. And frankly, there is no other asset other than crypto that makes sense in 5 to 10 years. And here's why. When my grandfather and father were growing up, they lived in a world of great powers conflict. So that was a world where no matter what the treaties were, the laws were, it was a war between the Soviet Union and the United States. And so if the Soviet Union wanted to do something, they'd just do it. And if, like, they'll go invade Afghanistan. And if the United States wanted to do something like the Korea conflict or the Vietnam conflict, just go and do that. And there was no geopolitical understanding to stop that. And so great powers conflict means that you have a great degree of uncertainty and volatility on a pretty recurring basis. You know, if you grew up in the 60s, a lot of people remember the Cuban Missile Crisis, where we literally came one key turn away from nuclear war with the Soviet Union. So that's not healthy for global business. Global business is very expensive because you have to coordinate across many legal systems. You have to coordinate across a lot of time. Let's say you're ExxonMobil, for example, and you want to do offshore oil drilling in West Africa. Well, you're probably dealing with a half a dozen countries in a 10 or 20 year project and $10–20 billion of capital investment. How do you do that if there's constant conflict and the leadership keeps changing? They'll just take your stuff or something like that, and it just doesn't work. So great powers conflict is not conducive to a society where there's large collective actions going on. And when you look at the global economy with technology and where we're currently at, everything is from somewhere else. Like that laptop you got there on the table, it's got components from more than 100 countries, if you take a look at a map like that. So no one country is responsible for that, even though that's an Apple laptop designed by Apple in California, they like to say. What they don't mention in the fine print is the lithium comes from Congo, and the aluminum probably comes from some mine in Canada and probably processed in Iceland. And the plastic on the keys, the petroleum for that may come from Venezuela and 10,000 other things, right? And so you have to live in a rules-based society if you're going to have global trade and be able to produce devices like that. Well, what happens when you go back to great powers conflict? Either you have a regression in the standard of living in the consumption economies we have, and we start living like we lived in the 1950s and 1960s or 70s, or you have to create an alternative system that's immune to the consequences of great powers conflict. So what is the alternative system? Crypto. It's the only one we have, because it's the only system that no matter if you're from China or Russia or the United States or wherever, you play by the same set of rules. It's the only one where you have rule of law. It's the code is law concept and the smart contract concept. It's the only one where your assets can't be arbitrarily frozen and seized. And it's the only one where you can get an immutable record, regardless if it's convenient or not to a country. It's there for arbitration purposes. So what will happen is, out of necessity, more and more companies will start moving into a crypto system. So in the long run, it's the only way we can continue to do global trade in the way that we're used to in a rules-based international order. The second thing is there's too much money in the world. We saw this with 2008. You know, this massive crisis happens, and their solution is just to turn on the money printer, and they never turned it off. You know, we saw the national debt balloon from like 8 or 10 trillion to $36 trillion in the United States. And everybody's like, well, yeah, we should probably do something about that. Well, you can't do something about that, but still run turbo deficits and still mass print money. So if you're an asset manager, you have these giant piles of money, where do you put your money to get returns? I often say, like, the worst job in the world is to be the head of the sovereign wealth fund of Norway. Because on one hand, you have $2 trillion. On the other hand, you have the Norwegians say you can't invest in petroleum, you can't invest in this, you can't invest in that, but we want you to get a 9% return. How do you deploy $2 trillion of capital and get a 9% return if half of your investment portfolio is restricted? So you need to find alternative places to stick money, and the only place we're going to have are real-world assets and crypto assets that operate on a global basis 24 hours a day, 7 days a week, and a lot of micro-cap, long-tail markets. So maybe Snoop Dogg goes on tour, and he wants to, because he needs some liquidity, tokenize the next 10 tours he goes on or 10 places he goes to, and You could buy a futures market on his T-shirt sales and his DJ fees and all this other stuff, you know, and you can speculate on how much Snoop Dogg is going to make on that proposition. You get a cut of the action, and that's a security. Well, you can create that now, and the cost of creating that is de minimis, whereas before it was functionally impossible to do that in a legacy system. And now imagine all these small companies in Vietnam or Kenya or other places that have phenomenal balance sheets and great long-term customer relationships, and they're wildly profitable, but they're not globalized, and so they have no way to do an IPO. But under these systems, we can now do that, and they are able to participate in the global economy. And because they can do that, all these people will chase it because they need to get that 9% yield or 10% yield for their fiduciary obligations. So the long-term prognosis is that in great powers conflict, the only way that anything's going to work is blockchain. In a world with too much money, the only way you're going to continue getting the returns we're used to is either an economic collapse followed by reconstruction, or going into crypto and crypto-related assets and creating new asset classes within it. So there's an inevitability in the long run about these things. The problem is, like, and the corollary to this is that John Maynard Keynes used to say in the long run, we're all dead. So it's a little difficult to time it. Is it 3 years or 5 years or 10 years? Because the issue with the macro is it moves the window. There's certain things that accelerate this, like Trump's trade war, for example, and there's other things that could potentially slow it down. And there are other things that just make it absolutely difficult to do anything, like if China invades Taiwan, for example, and we enter into a global conflict from a Cold War to a hot war. And those are the things I can't predict, so I can't give you like it's going to be 5 years or 10 years. But in the long run, there's an inevitability behind what we do.
But some, for example, also believe that Trump wants to lower the yield of like 10-year USTs. Would you agree that he maybe pursues that motive, or if he does so, how would crypto benefit from?
It doesn't, and this is the madness of it. So if his goal is to lower the yields on things, why in God's name would he provoke inflation? Because here's the thing: why would I, as an investor, buy something with a lower yield when inflation's 10%? I'm just going to accept like a 7% loss or 8% loss. No, I'm going to go into other assets, fixed income securities or whatever, that have higher yields because I need to offset inflation, or I'll go into more speculative things to offset inflation. So it doesn't make any sense to provoke a 5 or 10% inflation rate and then expect that you're going to renegotiate your treasury yields. It's just not going to happen. You'd want inflation to be low, and then you probably can get your yields lower there. At least that's the common sense interpretation. But it's not clear if the Treasury will be a flight to safety like it was historically over the last century. And that's unfortunate. I'm an American. I love America. I want our country to be strong. It's just I don't see how we win this trade war. China just announced today an 84% tariff on American goods. This effectively has ended any complex good transfer to China. There's no reality anymore that Boeing jets will be sold to China under this new regime, because Airbus is 84% cheaper. You see, and so this is the challenge when you have these gigantic tariffs. You can only sell small stuff. You can't sell big stuff. And how much small stuff does America make and sell? We're big stuff makers. We sell you F-15s, and we sell you F-18s, and we sell you complicated quantum computers, and we sell you like really high-tech manufactured goods. We don't sell you cheap plastic stuff that we make in factories with cheap labor, because that doesn't exist in America anymore. So high percentage trade war basically ends all trade between the country in that particular direction. And here's the other thing: is like there's a lot of stuff that China makes for us that we just don't make. It's not competitive with an American industry. We outsourced it, so we functionally won't stop buying it. We'll continue buying it, but now we pay a 20, 30, 40, 50% tax. So there's no way that we're not going to get a very significant consumption tax, basically, on the American people from this. And it could have been handled in a better way. Finally, the formulas make no sense. They said the goal is to resolve trade deficits, which is by itself already kind of a Pyrrhic thing. But we have trade surplus with Australia. So we have free trade agreement and trade surplus. Why is Australia being levied a 10% tariff? We should be giving actually a subsidy instead of a tariff under this formula, right?
For example, Russia's let out entirely, North Korea's let out.
Well, that's not a fair criticism, because they're already sanctioned. And they're let out. It's like, but you're not even legally allowed to buy their goods. So what's the point? It's just a talking point of the Democrat Party to score quick wins. Oh, he's pro-Russia and pro-North Korea. Well, if he was pro-Russia in North Korea, he would remove the sanctions then. I can't buy any goods from them. So it's pointless to impose a tariff, because by a tariff you're implying that you can do something. I'm not legally allowed to buy the goods altogether. So I think that's a pointless thing. But no, I think it's a ham-fisted strategy, and it's not going to work the way that they intend it to work. And I hope that we can come to a reasonable negotiated compromise soon.
I'd say we go back to crypto. It's an immensely interesting topic. We only have limited time, however, so let's move to Cardano.
In the US?
Yes.
Yes.
Exactly.
We were talking about Trump, and Trump also announced the EO not only for Bitcoin Reserve, but also for digital asset stockpile. I think in the he mentioned on Truth Social that XRP, ADA, and Solana will be also included. However, when the EO was then released, it said that only those assets would be in the stockpile that were either confiscated or forfeited to government agencies. And I looked it up on Arkham in their wallets. There is no ADA, XRP, or SOL at the moment.
That's not true. There is some ADA, XRP, and SOL, but it's de minimis compared to the Bitcoin holdings. So the Bitcoin holdings are about 212,000 Bitcoin. ADA holdings are probably a few $1 million, but it's hard to get an exact accounting because civil asset forfeiture occurs at both the state level as well as the federal level, and it's multi-agency. So you have Marshal Service, IRS, and these other things. And so one of the first things that needs to be done is an accurate accounting of what people have. And so really the executive order flirts with the bounds of executive power. And so the United States, if you want to set up a strategic reserve, historically it has been an act of Congress, like with the Strategic Petroleum Reserve or other things that we've done. Now, the president does have the authority, I believe, and scholars believe, that to order the Treasury Department to do certain things with things it already has. So the president probably through executive order can say, don't sell your crypto. That's a good starting point. 212,000 Bitcoin is pretty significant. But what the president can't do is say, okay, what we're going to do is now start buying crypto, because that would be an act of Congress to do this type of thing. Now,
they're working on that right now.
They are, but the challenge is that there's only so much political momentum any administration has for passing laws. And it's a priority queue. And so you have things like no tax on American crypto, the Reserve Project, the Market Structure Project, the Stablecoin Bill, and 4,000 other things that they want to do. And so which one takes priority? So in terms of the highest of the priority queue, it's stablecoins, because 76% of all economic activity in Ethereum, it's a very significant thing. And there's a ton of unanswered open questions that are existential to the long-term viability of the market. So we got to get that locked down. So in the next 60 to 90 days, hopefully they're going to pass a law to resolve that. The next thing up is market structure. And the market structure bill is the notorious, is it a security, a commodity, or something else?
Some sort of MiCA.
Yeah, and this is basically what we're run into with the SEC suing everybody, because it said everybody was a security. So we want to, it's the kill Scary Gary, bill, and we got to get rid of that. And so we're working on that, and hopefully that gets done roughly by August. And then let's say all that gets done, maybe there's room in the legislative agenda for 1 or 2 more pushes. So do you want to start looking into privacy coins? Do you want to start looking into DeFi? Do you want to start looking into a reserve? The political momentum for a reserve, there's not even broad-scale support amongst the Republican Party for this, much less the Democrats. So the momentum's not there, and it would poison the market structure bill to attempt to bundle it with the reserve bill. That's dead in the water. It's not going to work politically speaking. So if the goal is to get stuff passed, those two are there. And in terms of a reserve bill, a lot of unanswered questions have to be answered. For example, what's the inclusion-exclusion criteria? It was never answered by David Sachs or anybody at the White House. So if they're going to include token A over token B, under what decision-making did they do that?
It a little bit, right? They said Bitcoin is one thing and the other stuff is like...
Sure, but by what means? Why would they even have the right to separate it? Like, they're saying, well, Bitcoin's different. Okay, well then explain an objective set of criteria. How so? Is it proof of work coins are different versus proof of stake coins? Is it by age? The coin has to be...
Decentralization? I mean,
but sure, but then give me a definition of decentralization. We created one with the Edinburgh Decentralization Index. We have 8 different ways we can look at it. There's nothing in U.S. law or standards about decentralization. Is it by market cap? Is it by trading volume? Is it by transaction volume? you know, there's many different ways you can cut up the pie, and I can argue one way or the other. That's irrelevant. The White House has an obligation, or the lawmakers have an obligation to define that. And then you don't look at Bitcoin from a different lens of anything else. It would just be scored against that, and ideally it would score very high on that list as a desirable asset. Then what you would do is, like anything anybody does with an index, you create a weighted index. This is what Coinbase did with Coin50, and this is what these other people have done. So that is a sensible approach, and as the desires of the executive branch, like a wave against a seawall, come crashing against the legislative branch, that's the political reality. Is the legislative branch, if they're going to write a law, has to define those types of things. And that's why I say it's dead in the water to try to pass a law for a reserve, because it's too hard to work through all those different parameters in a very tight time window. It's a lot easier to talk about asset classification, like is it a security or commodity, and there's already a lot of good ideas in industry that we've inherited from FIT21 and FIA and prior efforts that we probably can leverage as a starting point.
Yeah. Are there coins and tokens in the reserve, proposed in the reserve, that you agree or disagree with?
No, because I think it shouldn't have been started altogether. I think you could start with Bitcoin just off the argument the government holds a lot of it, and it's a politically neutral token. But had anybody asked me, I would have advised them against doing the reserve until they had a clear standard. And it's easy to establish a clear standard. You just bring all the asset managers together. You bring your ratings agencies, you bring BlackRock, you bring Coinbase, you bring Grayscale. There's hundreds of these guys floating around. You bring them all together, and then you have technologists review it, and then you have the regulatory bodies review it, and then you can create a framework. And then within 180 days, you have a framework, and then you can take that framework to the legislative branch to basically codify, to give the Treasury Department an authorization to buy up to a certain amount of an index. Because the other issue is rebalancing. It's catastrophic to markets if the government doesn't have a clear and objective and transparent way to do this. Because what happens if they wake up and they say, you know, there's 20% of our supplies in ADA, and then somebody arbitrarily says, I don't like ADA, Charles is a poopy face, and I'll take the reserve down to 5%. Or just dump it all. Like, do they just go to the open market and divest that? That's traumatic, and you're not allowed to do this with index products. You have to go to the SEC, you have to negotiate this thing out, and you have to kind of figure out your disclosures and your divestment and rebalancing portfolio. So the U.S. government should be held to the same standard that the private industry is held to.
I would just like to know, I mean, there were like these meetups in Washington, like the White House with the crypto industry.
Yeah.
Are you also like talking to those people, like to bring up the same points to them? Yeah,
we tried. We tried to engage on the executive branch side. It's been great on the legislative side. Like we've talked numerous times with Tim Scott and other people, and they've been very receptive and open, and it's been very easy to engage with senators and congressmen. It's been mercurial and difficult to engage with the White House. We've tried really hard to get an understanding of their priorities, how they want to go about things. First off, when they did the czar, it wasn't clear how they were going to do it. Then they merged the czar with the AI czar. So you have an AI and crypto czar. I'm not sure exactly what they have to do with each other, but that's what they decided to do. Then we were told there was going to be an advisory group that would be appointed with that, and Bo would be the executive director. And then they decided that they were going to do White House roundtables instead. Then we were under the understanding that we would be invited to that White House roundtable, and then 2 days before they said we weren't. Okay. So there's been numerous of these things back and forth, and it's been very mercurial, and it's been very difficult for us to get any understanding of what the priorities are, what they want to do, how they want to accomplish, and that's fine. They're elected representatives. They have every right to do things the way they want to do things. But if those things require an act of Congress, they have to understand, A, it needs to be bipartisan, and second, it is not just the Trump administration. The Securities Exchange Act of 1933 was passed in 1933, 92 years ago. The FDR signed it into law. Okay, that's how old this thing is. So when you pass a law, you are handing that law from administration to administration to administration as a custodian. So the legislative branch has to have a longer temporal arc than the next election to make a decision about what to do. And the worst possible thing would be to try to rush some ham-fisted legislation in because they think every Democrat would vote against it and hope to God that they can get 50% plus one votes to be able to get that done. A, it's not sustainable, and B, it will not be used appropriately because the bureaucratic arm of the government will fight it and they'll just ignore it like they do immigration policy, for example. And then the second thing is it will not give any comfort to the American cryptocurrency industry. It'll just benefit the incumbents who are already there, like the Coinbases and the exchanges, but it's not really going to benefit any startups. They'll still continue to go to Dubai and other places where there's more rule of law and certainty and an easier relationship. If you're going to do this right, it has to be bipartisan, and it has to be first principles. It has to be fair and equitable.
I think there's some bipartisan, there's lots of bipartisan support for crypto, isn't it? I think
there used to be.
Right now, no, but I think right now the crypto industry put lots of money into the election process. I think there is many, so many congressmen and women who have like a pro-crypto stand elected in the Congress. So I think the circumstances for crypto couldn't be better, actually.
No, that's not a correct read. It used to be in November and December, there was a bipartisan consensus that crypto was one of the causal factors for Kamala Harris to lose the election. It was really Elon Musk, Joe Rogan, and crypto. That composition was enough to push Trump into office. So a lot of younger Democrats, like the Ro Khannas of the world, for example, and some of the older Democrats like Senator Wyden, I think they were completely open, same with Senator Fetterman, to this idea that we need to be pro-crypto. And we saw that with Fit 21. 60-plus Democrats voted on that. But that was a world before Trump coin and World Liberty Finance and these other things. And the politics have changed. And what's happened is the messaging that the media is portraying and the Democrat Party is going to run on in 2026 is crypto equals Republican equals Trump. And unfortunately, if that message gets sticky, even if a moderate Democrat wants to support crypto, they would be going against the party messaging and the party line. So it's creating some issues. And it's the same here in Europe, where Le Pen likes crypto and the AfD in Germany likes crypto. And so it's creating this idea that the right wing is a crypto thing. And so if you're trying to preserve the European Union and preserve the European order, you kind of have to be slightly not so in the crypto camp.
Do you see that a movement within the crypto space, within the crypto community, that tries to go against that framing from the, that framing that you basically are afraid of now? Trying to speak up against Trump and those efforts, what they're doing with Liberty Financial and the Trump coin and stuff?
Yeah, well, yes and no. The problem is we don't have any incentive as an industry to go against Trump because he's been actually pretty good for us. He's been very good for us in many respects. He honored a lot of the campaign promises. He pardoned Ross Ulbricht. He ended the lawsuits against the exchanges. Because everything is nuanced. But people think, when you always say one critical thing, you must hate the man and you're on the other political side. And that's the craziest, most fucked up, destructive thing when you're trying to solve real problems. There's many good things that Trump has done for the industry. The challenge is that there's been perplexing and confusing things. And the issue is if we allow that to succumb to partisan politics, those are the only things we talk about. We're not talking about the crypto czar and the existence of a crypto car. We're not talking about a bicameral working group in the House and Senate. We're not talking about all the lawsuits against the exchanges coming to an end. We're not talking about the SEC revising its disastrous policies and the SEC actually trying to work with industry and holding roundtables and productive conversations there. Instead, we're just talking about world liberty or these other things. And the issue is those become the wedge issue and those become the only thing we do. So if people were wise, they'd spread some of the money around and fundraise on a bipartisan basis and make sure Democrats get some too, especially ones that are willing to take a chance. And the other thing is there needs to be some more independence and courage, I think, in the legislative branch. It needs to stand up a bit and assert itself and say, look, even though we're in the same political party right now, we are custodians of a legal framework that will transcend any one administration. And if our goal is to create an industry that's $10 trillion or $15 trillion, the United States owning 50% of it, that industry will not be here in 2025. That industry will be here in 2035. So how are we going to convince people over 10 years, possibly multiple administrations and multiple changes of leadership in the House to stabilize? It has to be bipartisan. So where's Hakeem Jeffries? Where's all these other people in the process? Are they even being considered? That's the issue here, is that they're not. And so they don't feel ownership over the outcome. And they don't have any political accountability for the outcome. If they vote for it, they sponsor it, they can't go repeal it in 2 years. But if they don't vote for it, they don't connect to it, it's 51% to 49%. It becomes like the Affordable Care Act with Obamacare. You know, and it became the mantra of the Republican Party for 6 years, again and again and again, repeal and replace, repeal and replace. That was every election, 2010, 2012, 2014, 2016. We will be the party to get rid of Obamacare, kill Obamacare. And Trump finally did it, I think, in 2018. You know, so this is the thing. It's like you have to think about the long term. And the industry is just kind of recovering, and it has a lot of anger, and it's really hard, myself included as members of the industry, to talk to Democrats right now. We're really angry. It's not like they kind of sort of were mean. They were downright duplicitous and destructive. They put friends of mine in prison. You know, they sued every single U.S. exchange. It was like Kafka designed a regulatory regime. They said to Coinbase, come and register as a publicly traded company with broker-dealer licenses. Coinbase said, sure. They talked to the SEC on 20 separate occasions. At the end of all of that, they sued them, and in their filings, pretended like they'd never had a conversation. They said, Coinbase, we just discovered they're running an unregistered illegal securities exchange. We're like, you guys literally let them file an IPO. They filed an S1 to you, and you said retail investors at a scale of millions of them are allowed to invest.
Do you expect the Democrats then to say publicly just sorry to the crypto industry?
Yes, that is the key. They have to apologize and say, we got it wrong, we had the wrong policy, and that alone would go an enormous way. Because
you would basically also show support to them.
Exactly, because Trump never apologizes. The Signal Gate issue or any of these other things, which are just obviously wrong and obviously mistakes, they never admit defeat. So there's something to be said in any relationship, whether it be romantic, a friendship, or even governance. And as a leader, we got the policy wrong. We're sorry. It's time for us to move on. They had to do this in the 1950s and 60s with racism. You know, you had the Democrat Party in the Jim Crow South sponsoring brutally horrible, inhuman policies of separating black people from white people. And what did they do in the 1960s? They reversed course and they passed the Civil Rights Acts. And those Civil Rights Acts were an admission that the party got the policy wrong and they're going to do things differently moving forward. So the Democrats have a real moral opportunity to take a step up and say, blockchain is the only financial system we have that promotes and protects equality. It's the only financial system we have that the poorest people using it have the same rights as the billionaires. So they're going around with these progressive politics and saying, we want to get rid of the millionaires and billionaires and we want a fair system. You're not going to do that by regulating JP Morgan Chase. You tried for a century. Did you ever get an outcome? You know, even when you had a supermajority with FDR, did you get what you wanted? No. Did you get it with Obama when you had a supermajority? How many bankers went to jail after 2008? Don't pee on me and call it rain. It's not real, okay? So if you want to change the system, what you got to do is you got to change the rules of the game. So getting people into a different financial system that's intrinsically by construction fair is easy to do. You know what? It's a natural fit for them because they're the party of Silicon Valley, for heaven's sakes. When you look at Google, Apple, Microsoft, Facebook, 90% of the rank and file employees donate and vote Democrat. When you look at the venture capitalists, like 70 to 80% of the technology venture capitalists are Democrats. They're not Republicans. So why is it the party of future technology, the party of engineers, the party of academia is the party attacking protocol-based money and smart contract-based money? And they want to promote and preserve a financial order that by its very construction is intrinsically biased against the poor, the weak, and the vulnerable.
That maybe after the whole FTX and SBF stuff.
Not even that, you could argue that, for example, what we've seen over the last year was that crypto's main utility, at least that was the image, came from things like meme coins, gambling. I mean, I'm not saying that's my personal view, but that's a view that a Democrat could take and say there is no utility to this technology. What would you reply to that?
Well, okay, that's great. Then explain to me how a person living in Bangladesh or Pakistan or India can have no-cost remittances and loans that are 5% or 10%. If the legacy banking system was going to do it, why didn't it do it in the last 200 years? You know, this is just the preposterousness of the thing. You say on one hand, we want to get rid of the big guy and we want to support the little guy. And we have these protocols that literally you could be your own bank. You can custody your own money. You are in complete control of the whole pie. You don't have any middlemen who suck all the value out, and you can't be discriminated against because it doesn't care what religion you believe in, what skin color you have, if you're male, you're female, what country you belong to. Everybody's truly created equally under that thing. And they're saying that system is wrong because somebody chose to use that system for meme coins. Yeah. That would be like saying, well, cash is bad because somebody used it to buy drugs over there. Meanwhile, the U.S. government ships pallets of cash to Iran. You know, it's a preposterous argument, and it's a red herring, and it's what these politicians love to do. They love to hold crypto to a significantly higher standard than they do the legacy system. You know, J.P. Morgan Chase had $19 billion in compliance fines for the last 20 years. So they had literally a RICO investigation for their trading desk. That's the same type of investigation you do for the mafia, like the Gotti family, these types of things. And yet somehow crypto is the bad actor. No, it's the only actor that can innovate. Because the financial system, the way it's structured, the incentives are built towards a status quo. It's not responsive to consumer needs. It's not responsive to reduction in prices. It's not responsive to competition, because you need billions of dollars to even enter the marketplace. I run into this with my clinic. The healthcare industry is exactly the same way. I had to spend $200 million to build my healthcare clinic, to even just enter the healthcare industry at a reasonable scale. And you would not believe how anti-competitive everything is. Literally every stage of the game, everything worked against us. Even in the state of Wyoming with medical licensure, I was bringing world-class doctors in that I poached from Cleveland Clinic and these other places. MD, PhDs are just the most incredible doctors you ever meet. It took me 6 months to get their medical licenses in Wyoming. And I'm like, this is the guy that invented the procedure. And I'm in a rural area of 35,000 people. So on one hand, you have politicians saying we need more rural doctors. We need better health care in rural areas. Then a crazy billionaire wakes up, spends $200 million and builds this amazing world-class clinic. And then the laws, the regulations, the policy, the business culture does everything in its power to crush that. And you can't live in an economic system where you ask for innovation, you ask for equality, you ask for agility, but then create a business environment which everything in the business environment crushes that. And so this is what the financial world has been like for a very, very long time. There's almost no innovation in the financial world unless they're forced to do it, which is why they behave the way they behave. So if you're the party of the people, you really believe in populism, your only option is to create a parallel system which emphasizes the people and lets them innovate. And yes, you'll have meme coins and NFTs, but you know what? You're also going to have revolutionary lending products, and you're also going to have decentralized exchanges that never get hacked, and they don't have these agency failures, and the owners of the exchanges trade against the people. You'll also have democratization of financial products, and everybody can come up with these innovative new products and royalty flows and other such things, and you end up getting a global market where you have much more opportunity, much more trade amongst people. And that's what made America America. We forget that London was in charge of the world financial system in the 1870s. George Peabody, when he went to sell bonds, couldn't sell American bonds in London. He went over here and tried to sell our states. No one would buy our debt because it was junk debt. And just a generation later, the guy who worked for him, Julius Morgan, started J.P. Morgan, and his son became the J.P. Morgan and became this huge financial empire. So within 2 generations, the entire axis of the world financial system sifted from London to New York, because New York was radically innovative. They were very agile. They could do new things. London was a very verticalized, rigid system, and the only thing it did was protect the status quo and manage the money of the lords. And so this is the same situation right now in the American financial system. We've become the London of the 19th century, and if we want to get out of it, we have to embrace new technology. And this is what the American people have to decide. And I think that if it becomes bipartisan, it's a foregone conclusion. If it stays partisan, we'll get some regulation change and it'll be okay, but most of the good crypto will continue to leave the United States, and it'll go to far more agile jurisdictions like Abu Dhabi and the ADGM, or VARA in Dubai, or Singapore with the Singapore Monetary Authority. And it is what it is. You know, it's a decision the American people have to make.
Yeah. Do you see Europe as having an edge?
No. No. Yeah, I mean, the problem with Europe is that it's still stuck in that mindset of anti-competitiveness, and it's very empirical. It's like, look at the last 30 years in the Fortune 500. How many startups have entered the Fortune 500 from Europe? I can't think of any. Maybe you guys know one off the top of your head. And look at any industry vertical. Pick aerospace. How many?
Spotify's from Sweden, I think.
Spotify's from Sweden to the Fortune 500. Okay, that's one.
Spotify, Zalando maybe.
Yeah, I know, right?
But I don't know if they're in the Fortune 500.
I know, right? It's like maybe they're there.
The Fortune 500, they're definitely successful.
Yeah, exactly. And there's certainly a counterexample here and there, because you can't write off several hundred million people in one of the largest economies in the world. But by proportion, given that Europe's roughly the same GDP as the United States, it should be 50-50 if all things were equal, right? So half of your Magnificent Seven should be in Europe and half of them should be in the US, give or take. The fact that the vast majority of the really innovative new companies, whether it be SpaceX or Tesla or Apple or Google or Microsoft or Facebook, especially on the technology side, are in the US. And also, when you have a really promising, interesting startup in Europe, they tend to relocate once they get past the Series A, Series B. It's telling you that there's a protectionist element inside Europe that makes it intrinsically difficult. Like here in France, the 75% tax rate, and it's damn near impossible to fire people after a certain amount of time. That's not conducive to a startup culture where you have to take a lot of risk, you have to let a lot of people go very quickly, and you have to have flexibility to be able to fail fast or merge with people. The VC culture is exactly the same. You know, people offshore that VC side of things. So Europe has to solve that problem. They have to decide, do they want to protect the incumbency, or do they want to promote innovation? And if they want to promote innovation, it's not just cut a check to a person. It's a cultural thing. You have to look at the work week. You have to look at the HR. If you're doing a startup, people have to be prepared to work 80 hours a week or 100 hours a week. You know, the joke we like to tell in the United States is, in Europe, somebody says, okay, well, I'm going off for the summer. I'll be back after my ski trip. In the United States, they say, oh, I'm having surgery this morning, but I'll be back in the office after 2. You know, you have to be willing to put the hours in. You have to have the work ethic for it. You have to have flexible HR policy to be able to let people go quickly and people to come quickly. You have to have great tax policy for it. You have to have good policy on the startup side, especially for stock options and for that side of it. And then also you have to allow people to fail. And if you're addicted to keeping people alive and preserving, protecting institutions, you can't do that. And then Europe also has a disadvantage where they never unified the HR policies amongst the countries. You know, in the United States, it's quite easy for me to hire somebody in Colorado and California and Wyoming. In the EU, even though they're part of the EU, you know, there's a world of difference between the labor laws of the Netherlands versus the labor laws here in France versus Poland or Germany. And I can't just transitively float people easy between these. And in a startup culture, you need to be able to do that. You need to be able to quickly bring people in. I
think that the problem is not, maybe the language is more a problem, because, for example, my girlfriend is from Italy and she doesn't speak German. You know, she's working in Germany still. It's hard to find a job for an English speaker than basically in Germany. So maybe that's also like a bigger problem for
yeah, but it used to be, but now you have ChatGPT and these other things, and translations are quite good.
Yeah,
but
if you're dealing with companies and with German companies, they want to speak German. You
know, and that's a fair point. It's the same for French. You know, they're notorious for this, and so there's some barriers there.
I'm just meaning, you know, because you compared Europe to the US. US is just English. You know.
Yeah, but in the long term, you can always sort that out. Like the trade relationship between Poland and Germany is extremely strong, and there's an enormous amount of outsourcing from Germany into Poland, especially with BMW and Mercedes and a lot of their tech stacks. They use Polish developers these days to take care of things, and they found a way to cross those linguistic barriers. So, you know, you can't solve everything, but the very first thing you have to do is a considered and deliberate startup and hacker mindset. And you say, okay, let's create some zones in Europe where the innovation will come, and let's try to find a way to bring people to those zones. And we have light touch in terms of the regulation, the taxes, and these other things. And then we can figure out a way to benefit the union as a whole. And that's going to require some courage. And Europe is going to have to decide how to do that. Everything in Europe is restructuring. NATO is restructuring. The defense spending is restructuring. There's a lot of discussion about tightening the European Union. There's also some discussions about who's going to be in and who's not going to be. Obviously, the UK left. If certain parties win in Germany and France, they may actually leave the EU as well. So this all has to get sorted out. And that's also not a conducive environment to startups, because if you don't even know what the overall regime is going to be, you probably want to go to a safe harbor. Paradoxically, that tends to actually favor authoritarian governments, especially stable authoritarian governments. This is why when you look at the Middle East, they actually are doing pretty well, because they have all the money and the regimes aren't going to change very quickly. It's like a ruling family for multi-generations, and they've committed themselves to open and free trade and a consistent legal set through a sandbox structure. So even though the local Emirati laws in the Emirates are very restrictive and tough, when you go to the ADGM, it's a sandbox, and there you have English common law, and you have a very nice tax system and all these things. And what's cool is that the incentives are up front. It's very clear what you have to give up to go there. You know, when you go to Abu Dhabi, they say, look, you got to move here, you got to create jobs here, you have to hire these people.
Just to ask, because I mean, you said then we need like these, or crypto or in general innovation would thrive under an authoritarian regime.
I didn't say crypto would thrive, I'm saying startups in general actually are right now doing better under that setup, because there's so much inconsistency in the elected government.
Solution for Europe. I mean, I think authoritarian regime is not an option.
I'm not advocating for that. So authoritarian regimes do well when there's political instability, because what they sell is stability. There's one leader, one voice, one way of doing things, which is why China is doing very well right now. Democracies and republics do really well when you have consistent rule of law. So you have to, over a period of time, 5 years, 10 years, 15 years, create stability. And so what Europe has to do is speak with one voice, one stable voice, honor that commitment, and then be prepared to invest in that for 5, 10, 15 years. And if that is the case, then everything's okay. We saw this with Honduras. They said, oh, Roatan is going to be an exclusive economic zone. It's going to have no taxes. It has all these amazing things. And we even put it in our constitution that for 50 years we can't do anything. The next ruling party comes in like 2, 3 years later, and they said, oh, actually we want to change everything and tax Roatan and all these other things. So it's not just good enough to say we're going to create a sandbox or exclusive economic zone. You have to convince people there's rule of law, there's stability. And it's hard to do that in a volatile democracy. So what that means is that all the ruling parties as a coalition have to come together and agree on some baseline principles, and they have to legislatively put those principles into a law or structure that's notoriously difficult to change. This is why constitutions exist. So typically when you pass a law, it's 50% plus 1, depends on the legal system, but a constitution is typically 2/3 or 3/4 inside the governing structure. So at that point, there's so much political momentum you have to change it that it's very unlikely that local political squabbles as the president changes or parties change that are going to undo that. So this is the same with the European Union. They have to figure out a structure where when they create these types of zones, they exert long arc stability. And they have to be prepared to accept that those zones are going to have to be open and easy for people to immigrate to, like Abu Dhabi is, for example, a low-tax regime, easy to fire people, easy to hire people, and able to tolerate, as you've just said, about the linguistic differences. I don't speak Arabic. A lot of people going to Dubai and Abu Dhabi don't, yet they find a way to make that work inside the jurisdiction. So the recipe is there. And this is the great success of Singapore, and this is the great success before that of Hong Kong. So it's not like you have to be super imaginative to do it. You just have to commit yourself to do these types of things, and it's challenging. The other problem, though, is that it goes against that European desire for preserving the institutions and the vertical things. And so the problem with the startup culture is you have to be completely willing to throw away your old companies. So when you have a Microsoft, Microsoft killed some old company. When you have a Google, Google killed some old company that existed. So if you have a 200-300-year-old dynasty that's existed and it's kind of a bedrock of your society, it's not going to survive in a startup culture. Because at some point, some incompetent person comes in, they make catastrophic business decisions, and a startup will come and route them around. And that's another cultural thing. In America, we had the luxury, for better or worse, of not having institutions. We were a relatively young country. Everything was always in flux. We had that frontier culture. So we really loved tearing things down, and I'd argue sometimes too many times. So every 10, 15, 20 years, we have a new set of actors, and technology is the greatest example of this. It wasn't too long ago that you'd pull out your BlackBerry phone and you'd open up Internet Explorer on it, and you'd go to Yahoo to find your AOL account, and then you would use it to reset your MySpace password so you can post about, how much you like eBalm's World. I mean, it's like all these platforms had hundreds of millions of users, and now none of them are around anymore in any meaningful context. So there's no permanency or stability in these types of things. And when you have a strong startup culture, that's what you have. You have that constant destructive reinvention. If your culture likes legacy and stability and these types of things, it's not really compatible with that. And that's okay, but then that means you have to accept that you're not going to get startups, which means you have to be good at investments, which is what the Norwegians do. They just stockpile money and they go and send it in other places. But that then means you have to have good trade with people. So the countries that are good at startups, you have to be able to invest in a free way so that the value creates rising tides on both sides. And the issue with great powers conflict is that you can't do that. you know, because the countries are fighting each other. So then everybody gets very fragmented and adversarial with their things, and nothing works well. So I think the only way to trade is actually going to be crypto under the conditions we're moving towards, and it's a fascinating thing, and I don't have a solution for it at the moment.